Morning all, how are we all doing? So I was just scanning through the news. How is everybody? All good? Morning everybody. Morning Ian. Did I enjoy the spa on the bar? I did. Very sparred. Very, very nice place we went to. Put it this way. When you turn up in the car park, I've got a 2-year-old BMW iX3. Quite a nice car. My car looked really crap. There were Bentleys, Porsches, Lotuses. Most people had only 4 digits in their number plate because they were that rich. One of those places. People turning up in shooting jackets because it was a country retreat. So yeah, very good. Felt a little bit out of my depth in wealth there, put it that way. But yeah, it's good fun. Morning Kennelly, JC, Evans, AZ, Virginia, Gregors, Yotko, Rajiv, Magnus, Siliso, how are we doing? Right, so got to remember how to do this because I've had a day off and you forget everything when you have a day off. So just wanted to quickly cover Friday's news because I wasn't here on Friday. There's a couple of bits that came out on Friday regarding interest rates. ECB may have to tighten more, higher interest rates from them, potentially. Also, Collins came out and said, I wouldn't take additional firming off the table, potentially more for the US as well. So a couple of bullish statements coming out of the ECB and the Fed. Main news on Friday, as you can see, where's my pen? Oil. OPEC basically had enough and said, just stop selling oil. You're nuts. As I've been saying, why is oil going down? So OPEC basically came out on Friday and put a stop to it and said, we're going to have a look at more oil output cuts, basically. So if you keep selling oil, we will stop producing it, and therefore there'll be less of it. So you will have to pay more money for it, basically. So OPEC did the trick on Friday and put a sharp stop to this ridiculous drop in oil. Unbelievable moves against it. So that's rallied very, very hard. I had nice aggressive drawdown control positions put on this to try and get out of this on, last week, Thursday, Friday. And they've done their trick. I'm in profit on oil. I was 9% in drawdown on oil on Thursday last week. I am now 1.5% in profit on it. That's how quick it can turn with aggressive drawdown control. That's what it's for. So I'm holding it at the moment. I'm watching it very closely, though, because this is just a V-shaped recovery on the Thursday move. But usually a V-shaped recovery forms a new market structure. We've had a reversal this morning. So hopefully that is the start of a new reversal leg up on oil. So I'm prepared for it to pull back on its way. I would much rather, obviously, it just popped today, but we'll see. So I'm going to keep an eye on that today. Other news, not a lot else over the weekend. Nothing out of Japan. So looked at US dollar yen this morning. It's coming down, yeah. So I wouldn't expect anything out of Japan now. We're back down at the lows from 3 weeks ago. Maybe this is it. Bye-bye US dollar. We'll see. But yeah, there's no reason for an intervention on the yen because obviously the US dollar yen's now dropped. So apart from that, not a lot of other weekend news. Today, bets on rate reductions risk are prompting a hike instead. Let's see what's going on with the euro quickly while he's waffling on because we've got the DAX. DAX isn't moving, so I don't think it's really doing anything, whatever's being said, but a lot of movement. So that's a recap of the news from Friday. So there's a few bits in there that are quite important. So yeah, we'll see. Morning, everybody else. Come and say hello to Mark. Have a expensive car only means more outgoings. Yep, but they can afford it. How much debt do these people hold? Not a lot. I wouldn't think, judging by them when I was looking at them. It's really weird. It's like walking into it's a very, very, very big, it's called South Lodge, the place I went to. It's a huge country house retreat in 90 acres with a spa. And you know you're going to a posh hotel when you're approaching the entrance to the hotel with your bags, and suddenly somebody opens the door and welcomes you by name because they've seen your number plate coming up the drive, which is 20 miles long. And then everybody in there is quaffing like cognac, and you can just smell the money. It's amazing. I was lucky. I had a voucher for it. That's the reason I went there. Otherwise, I wouldn't be able to afford it. But you feel like a bit of a fraud in places like that because everybody else is there because they've got multi-millions, and you're there because you got a voucher. It's very amusing watching. People watching rich people is fun. Very fun. How much debt? Yeah, I'm better. Morning, Martin. You're still doing a Black Friday sale? Yep, on Black Friday. I'm not one of these people that believes in Black Friday being 6 weeks. It's Black Friday on Friday. I'll do a deal on Friday because it's Black Friday. Everybody else has been doing a Black Friday deal for 2 weeks. It's not Black Friday. It's like starting Christmas at the 1st of November. It's not Christmas. It's the 1st of November. You've got to get through November. Then it's December. Then you've got to get through December to get to Christmas. Yeah? Don't do Christmas in November. It's not Christmas. Don't do Black Friday the week before Black Friday. It's Friday. Anyway. Morning, John. Morning, Monkey. So let's quickly cover the news this week. Oh, my God. Somebody doesn't get the indicator in Telegram again. Yeah, we've had a couple of talking heads. We've had 11 p.m. this evening. All right. So we've had Bailey talking this morning. We've got it's not on the calendar, but it's the autumn statement today. I'm wondering if it's yellow. No. Okay. So today is the autumn statement in the UK, which is where the Chancellor lays out plans for tax cuts and things, and state of the economy. It's supposedly going to be very, very bullish, is what the news is saying. So we might get quite a bit of volatility coming in from the pound today. So keep your eyes peeled on here for anything from Jeremy Hunt. There's been a few bits like Chancellor Hunt this morning. Or rather than Friday, I think that was 1:33 on November the 19th. It's all out of sync again. For some reason this does this sometimes. It just gets a bit out of sync. So yeah, keep your eyes peeled for that today. We'll go for the news in a sec. The market's just about to open. 9 seconds. So fairly tight range with a gap up today on the DAX. Very small gap though. That'll be done in potentially one candle. Pre-market range, very small, only 90. So no pre-market trades taken today. So let's see if we can get that gap fill done fairly quick and then take the 5-minute opening range break. It's a really difficult distance today because if the opening range goes in fairly small, what's 160? Let's measure it. Yeah, so ideally, if we can get this price up to here in this initial cash balance, we've got potential for break short. So just looking at the indices at the moment, obviously we're on the back of a massive bull run on all the indices mostly. So we are really due a profit take move on this just to get a little bit of power to get a new leg going. I think the indices look like they want to go bullish now, which is good. We hope it'd be lovely to enter into the bull market because we know where we're going with the US dollar then. But at the moment, it's all rallying. So we're due a pullback. Upside on this today, obviously, is going to be Friday's high, which was a big, strong resistance. We hit that 3 times on Friday, could not get through. So that's a very strong resistance. Market not wanting to go through this 160, well, it's 159.50 basically level. So upside, there's not a lot of room today before we hit that again, and we're likely to find more limit orders there for pushing us back down again. Downside, we've got the previous day high there, which is plenty of room to the downside, and obviously Friday's low, plenty of room as well. That's well within ADR, which is this little accumulation here. So there's much more room for a downside run to get going today if they can. If you look at the other indices, they're all very similar. We've got big run-ups, basically. We've got nice profit take moves to do on all of them. So big propulsion gap there to come and fill on all the US indices. So I like it to the downside. No movement on the Dow, look, totally sideways 3 days. So yeah, we'll see where we go. But upside, we've hit that kind of. This is when we're doing a gap fill. I don't always go that. That's pretty much done. So that's loss. Anybody that's offside on this, basically, they can just write that off. So if it comes back to roughly where we were at the close for the gap, I class that's pretty much done. So that would be a lovely break short today. And then see if we can get some momentum to the downside, because there's plenty of room to go. So we'll see where we go on that. 2 minutes left on that candle. We'll quickly cover the rest of the news. So this week, we've got Bullock speaking this evening. Tomorrow morning, it's the monetary policy meeting minutes for the Aussie. We've got monetary policy report hearings tomorrow for the pound. With the autumn statement coming up today, I would say that's probably not going to be very impactful. So, but anyway, that's coming up tomorrow morning. You need to be aware of. Main news today, tomorrow is CPI for the Canadian dollar. We're anticipating inflation dropping. So potentially negative move CAD, negative move US dollar. We've got FOMC meeting minutes on a Tuesday at 7 o'clock. Interesting. Okay, we don't normally have that on a Tuesday. But we've got an FOMC meeting tomorrow. That will potentially kick the market into movement. So a big spike just gone in on the indices there. Okay, so there's your 5-minute opening range. Fairly big range there, and ended beautifully in the middle. Look, that's a lovely place to close that 5-minute candle. If we can close it somewhere in here, because it means you potentially got the start of a nice run, and it's going to be quite difficult for the market to whipsaw that if we can go from here. So yeah, nice. Like the look of that this morning. See, 7 seconds. So yeah, we're going to close pretty much total indecision. Tiny little body, bullish. So there's the orders going in. God, that's a wide range. I'm going to move that down a little bit, because it's quite a wide range with 200. Okay, so we'll see where we go from there. So nice 5-minute cash balance gone in. It looks like we're kind of holding this low, doesn't it, from Friday at the moment. So we're just holding this area. If we break this area, we've got this little accumulation to run into, which is 2R to the downside, which is that propulsion gap. And then we're looking at coming back down to there, which is the low from yesterday, which is basically Friday's open, is potentially where we're going to find some orders sitting around about that accumulation. So lovely break to the downside, potentially sort of 4.5R initial drop, if it can get down there. US markets, though, bullish at the moment. See where we go. Right, back to the news. So yeah, we've got an FOMC tomorrow. That's normally on a Wednesday. I'm not quite sure why we're having it on a Tuesday this week, but we are. Bullock speaking again on Wednesday. We've got the unemployment claims for the US again on Wednesday afternoon. University of Michigan revision, and then we've got Macklem speaking. Bank holiday in Japan on Thursday. Quite often, Japanese bank holidays, we get a lot of movement on the yen. The rest of the market manipulates the yen, so might get a big yen day on Thursday. PMIs at the end of the week on Thursday, and then Friday's pretty dead apart from the US PMIs after market open. So fairly mixed news week. We've got something impactive happening every day this week, but really the revolution this week is around tomorrow. So the CPI is the big one this week. Inflation figures for Canada. There we go. Just seeing if the ECB are going to say anything else this morning. Nothing at the moment. Right. So no trades triggered yet. That's a very quiet open. Well, it's a lot of volatility, but no direction yet. Rest of the market is still bullish. US indices trying to push higher. NASDAQ's testing new highs of the day. Here we go. Morning, Kibria. How are we doing? So I just want to watch this and see if it does break. I'm keeping an eye on it over there, but like we're testing pre-market low. So see if we can get out that pre-market low. That would indicate bears may be attempting to have a go at taking control this morning, which would be lovely. Nice big range today. So unless the market's got literally no direction, we go into rotation today. If we do get a break and any kind of even weak trend, it's going to be quite hard for the market to hedge it. So should be hopefully a profitable session, but can't actually get a break yet. So just testing these lows again. So I'll be taking a break of those lows from Friday. If it gets anywhere. FTSE's trying to go short, is it? Good, that will help. When are you going to start the algo on the yen again? Don't know at the moment. Short on the DAX. Yeah, I don't know at the moment. The problem with the yen is I went over my statements on Thursday for the last sort of quarter, just over a quarter actually, and looked at all of my yen trades because I had quite a few long holds on the yen. So obviously with 5-minute chart, it's not going to help, is it? So with these positions here, that hold there cost me just over 2% to hold it. So I looked back through all of my yen trades for the last quarter. There wasn't actually that many. If you look at the yen on the hourly, when's that going back to? August? Where are we? August, September, October. Yeah, so that's pretty much what I looked at. There were quite a few trades on the hourly. Not huge amounts, but there was one there. There was one there. But most of the trades that I got into on the yen were in and out fairly quick. There's a couple that were holds, though, which were longer holds. Like, you know, this pound yen here was a fairly quick in and out. That was a quick in and out. But overall, the yen was nowhere near as profitable as pretty much everything else, mainly because of swaps. The thing that concerns me at the moment about the yen is if the US dollar now drops, the yen will potentially start to power up a little bit. So what I'm concerned about is the yen squeezing a little. So I've decided at the moment I'm not going to trade the yen at the moment. I'm just going to leave it be and just kind of monitor it for a bit. Just because I've been a little bit stung on it, and I'm unsure as to what is going to happen over the next quarter with interest rates. So as we've just heard this morning from on Friday from the Fed, and again this morning from the ECB, we think we're at terminal rate on interest rates. They don't. So the market is kind of factoring in the fact that inflation is now coming down at a decent rate. It's all dropping. We're getting close to targets. Like in the UK, we've hit our halving target that we wanted to do this year. So it's all getting there. Jeremy Hunt's going to come out this morning and say, hey, guys, it's all looking good. So it's all saying this should be coming down next, which will start to weaken most currencies. The Japanese yen will probably be the one that will power up the most moving forward, because if every other currency is reducing interest rates, that will weaken them from an FX perspective. The Japanese aren't going to do that because they've got negative interest rates. So although there's no reason for the yen to be powerful, when you pull money out of other currencies, you have to put them somewhere else. Swiss franc and the yen tend to be the places that money will flow into. I don't think that these rates are going to come down very, very quick, though. And now we're hearing things from the Fed and from the Euro about, hang on a minute, you might be jumping the gun a little bit here. We're not quite where we want to be, and we're not getting there as fast. I just don't really know what the yen is going to do. So it's safer just to not trade the yen at the minute, in my opinion, because what I don't want to do is get into sideways moves on it, where the market is unsure whether it's going up or down, in which case we just go sideways and you hold the yen because it just costs you money. And what I also don't want to do is the yen to suddenly power up when they say, actually, yeah, looks like interest rates are going to come down in May. Okay, brilliant. Well, let's reduce the power of the US dollar, put it into the yen, and all of a sudden the yen goes into a squeeze. What you don't want to do is be in a squeeze on the yen for 2 to 3 months, where it's costing you to hold the thing overnight. So it's safer, I think, at the moment, just not to run it. The main reason I stopped running it was because I was waiting for the intervention and I didn't want to take any longs on it. And I think that's still the case. I think you still should be shorting it. So everything against the yen, I think it's all, you see it's all started. Look, the moves have started. It's started to power up. But just starting to power up doesn't mean it's going to do that. It could well just do that. And if it does that and you don't get out, as you saw with me in the US dollar yen, it's going to cost you a fortune. DAX is stuck. Not going anywhere. We have just tried to break those lows, but they are buying them up. Not really going anywhere at the minute. So just not at the moment. I'm not touching it. Morning, Neo. But it doesn't mean you don't have to. You put it, trade what you like. If I don't get into it and all the yen does is that for the next 4 weeks, you're just going to get in, out, profit, in, out, profit, in, out, profit. And I'm going to be sitting there going, wish I was trading the yen. I have no idea. Obviously, because if I did, I'd do it. But I just think for the moment, just for the cost perspective, and the fact that I'm having a tough month, mainly because of oil. I just don't want any more costs. Okay, so we've just broken back up inside the opening range on the DAX. Wow, this is a exciting session, isn't it? Right, ADRs. Quite a few ADRs to look at today. US dollar yen being one of them. No weeklies, obviously, because it's Monday. So US dollar yen, big, strong push down there today. You can see we've got 3 yens on there today, US, Euro, and CAD already this morning. So Friday was another big leg down. We've done the same today, same the day before, 2 days before that. Yeah, so we know we've got a lot of volume now coming in on this yen. So US dollar yen ADR hit. There's a nice W pattern going in there at the moment. So your 5-minute reversal alert's already kicked in off of 125 ADR. And that is potentially putting in a double bottom. So right now, it's potentially a very nice W reversal, double bottom on the US dollar yen. So we're coming down into the lows from 3 weeks ago. Yeah, so we got stuck in this range for weeks and weeks and weeks. And this is exactly what I was talking about. This is what cost me all the money. We're back down there. Now you can see the market was really contracted. No idea what to do. Japanese were threatening intervention. And then all of a sudden they went for it. Markets expanded now. So we're back to normal volatility. So this could well be the start of a double bottom. And we're just going to hold in a range for a while. No idea. DAX is short. Short breaks on. So yeah, nice place for a long double bottom. RSI divergence. W bottom at 3-week low. So that's a nice one on the US dollar yen. Look at the other yens. Euro yen extended to the downside. That's at ADR, potentially putting in a retest of the previous reversal from Friday. So potential long opportunity there. Again, no idea. Don't forget, there's always two currencies at play. The yen will probably strengthen up if the US dollar weakens, but it's not going to strengthen up to the strength that the US dollar was. So, good news on the euro, and a good strong euro is still going to make the euro yen go up. Even if we've got a strong yen, this is still going to take control at the moment. So, potentially nice retest happening on the euro yen. Propulsion gap to the upside, target 125 ADR on that one. You've got a couple of other smaller targets. You've had your reversal on the 5-minute, I think. No, you haven't. Okay, it's just invalidated. So if the person in Telegram is in here at the moment, that's the bad. Funny name. This is what the indicator does. Yeah, it signals a reversal in structure, and it shows you the last one. Yeah. Then every time there is a new structure reversal, it alerts you to the fact and draws it on the chart. If market makes new structure, it removes it because that's not now the structure, is it? That's a new structure forming. Sorry to talk like I'm talking to a child, but I have recorded 25 hours of video about how the indicator works. And yet people still go, it repaints. Yeah, well done. It draws in market structure. That changes. So it redraws it when it changes. I have said this for 3 years since I released the indicator, and I've got multiple videos on it. Yet people still go, it repaints, it's crap. No, it's just doing something. You just don't understand what it's doing. Anyway, relax. Euro yen. So there was a reversal alert there, but it's repainted because we've got a new low. And now there's a new reversal alert going to go in there. I sound like, what's that comedian? I went to see him recently. It's really bad that I've forgotten his name. Michael McIntyre, I sounded like then. That was weird. I went into a Michael McIntyre impression. Euro yen. So yeah, potentially nice little bounce there. There's a W going in at the moment. That's a big, strong push down. So that potentially is a nice little W pattern going in on there as well at the moment. CAD yen also extended 100 ADR. Seeing where we are on this one. Kind of flip-flopping around in the middle of nowhere. We got a little bit of a low there, which we've tested. So that's an inverted head and shoulders pattern. So that is a decent support, which we're at the moment. So again, with the indicator, it's not something you take every trade on. The indicator is a signal to tell you that the buyers or the sellers have just taken control of the market. That's literally all it's doing. It's just saying, hey, look, there's more sellers than buyers. You can actually see that on the chart by watching the candlesticks, but it tells you that really now they are in charge. Yeah. So this is an area twice before the buyers have stepped in and taken control. Yeah. So when you get a reversal alert at that level, it means that the guys that bought twice last time and made the market move up, potentially doing the same thing again. That's all it's doing. It's a signal indicator that tells you when there's a shift in structure between buyers and sellers. There you go. Reversal alert at ADR. You've just put a new low in. So that is kind of the start of a stop hunt W, where we take out the low. And again, if it left that in there, you would just have yellow boxes all over your chart and it would make an absolute mess, which is why it doesn't do it. Not doing it to try and trick you or con you. It's doing it because otherwise you wouldn't be able to read your charts. Yeah, so Kajen, nice extension to the downside, potential bounce. Lovely propulsion gaps on this on the hourly. Look, that previous move should retest some of that, but treat that as one massive propulsion gap. And again, massive propulsion gaps are usually a fundamental shift. That was the news on the US dollar that started selling off. So there's potential for that to get retested. The other ADRs you've got, US dollar based, New Zealand dollar, US dollar, ADR, nice wicks to the upside on that one. Look, nice rejection, potentially lower high going in. We haven't retested that area. So again, last week I was looking for some kind of indication as to whether this is the start of a weakness in the US dollar. Certainly appears to be at the moment. So we were looking for this propulsion gap to be tested. Look at that. Exactly. I can't remember which day it was I said it. But I said what you will often find, it must have been Wednesday last week, I guess. What you will often find with these big propulsion gaps is they will test the top of it. And as soon as they hit the top of it, they will go. Because the guys that started this move and bought this, they did not stop buying it until we got there. Then they bought some more of it. When we come back to this area that they initially started that buy move from, they'll buy more of it. That's exactly what propulsion gaps are doing. They're showing you where the market orders are from the banks. And they're showing you where the banks are likely, if they want to continue the move, are going to do it from. And we often test the very top of these propulsion gaps and bounce. These big ones, I mean, the ones where we've got a fundamental news event that's caused a very large move in the market. Yeah, these quite often, these are the ones that do not get filled. So prime example there, New Zealand, US. So yeah, that's extended to the upside. Potential M pattern going in for a pullback on that leg, but could well go that way. So all ADR reversals are sort of short-term intraday moves. New Zealand dollar CAD, again, nicely extended to the upside, same sort of thing. Got one short on that from the RSI extension back there, the hourly RSI extension, which is behind my head. Hasn't gone anywhere since I got in. I've had a couple of outs on it. I had a nice out on it Friday. Again, I'm targeting the very high area of that propulsion gap. We haven't got to it. So likely I'm going to have to add into this. The thing going for this one, which is a little bit different to the US, is obviously this is the Canadian dollar. Canadian dollar is affected an awful lot by oil pricing. Fingers crossed with what OPEC said last week, oil is now going to start to rise again. Therefore, the Canadian dollar will power up. However, the US dollar dropping fast and hard will drag the CAD with it. So this could go either way. But we're coming up to last week's high. So we'll test this at 125 ADR. I don't think I'm going to get a second on this. I need kind of 45 pips. So if we hit that and retest with a nice tight reversal alert on M5, I'll be taking a second position on this one today. That's going to be too tight, I think. 34. Yeah, I won't get into that. But if it does break out the high and then give us a reversal alert, there's not really anywhere to go, is there? I mean, that's really your next resistance. So if we do break out of this level, I'll be scaling in short on this one and just waiting for it to come back down again. So nice extension on New Zealand dollar CAD. Good short opportunity there. Those are the yens and the Aussie Swiss and the Aussie CAD. So Aussie Swiss, we just hit ADR on that one. That's potential double top last week's high. Putting back down. Again, we've gone nowhere on this one for a week and a half. Just forming a range, just in balance at the moment. Market's very happy to trade at this level, and it will continue to do so until somebody says, let's have a go at that price, or let's have a go at that price. So we'll get a breakout of that range at some point. So that's either going to be a double top. We're going to go and test down there, or at least down to there. or we are going to get a breakout. So if you go short on the ADR reversal there, scale in and then get out when they double top that. And Aussie dollar CAD. So Aussie CAD got 2 positions on this one from the H1 RSI extension back there. That was the first entry. So I've been in this for a week now. Big strong move on the Aussie and weakness in the CAD. And again, same as the New Zealand dollar CAD, this one. If that Canadian dollar rallies on oil pricing, obviously that'll undo very, very quickly. So oil inventories this week, Wednesday, will be interesting, I think. Because the market may well wait until then to make a move, but we'll see what happens. So yeah, 2 positions on that one. That's still pushing this morning, still going like the clappers. So reversal alert, you would have had an initial reversal alert there this morning. So that would have been your first reversal alert. Your second one's going to go in there. So virtually the same level. Your M pattern reversal. So, yeah, looking for just a pullback on that. Just outside of ADR for me. Must be fairly decent distance between those entries. 47, so 3/4 of an ADR, not too bad. So I'll be getting into another one on that one this morning. So I'll be taking 3rd entry on that. Average will jump up just above that resistance for support. New Zealand dollar Swiss has just hit ADR as well. So Aussie dollar Swiss, that's extended, just going outside of those highs at the moment, and New Zealand dollar Swiss as well, doing the same thing. Another ADR hit there. So Aussie dollar and New Zealand dollar having a very good morning. It's not really to do with the Swiss franc. Swiss franc is a little weak this morning as well, which is obviously helping the Aussie and the New Zealand Swiss. If you've got a weak Swiss franc as well, obviously it makes them move a little bit quicker. So there's your ADRs. Quite a few of those this morning. For a Monday, that's quite active, isn't it? A lot of volume. We've got a few RSIs to look at. Just going to whiz back to the indices. So DAX, we've got 1 hour break to the downside, which is basically just come back into that high. That's it at the moment, though. Not a lot of volume. So this accumulation basically is potential support. So when the market moves, it rallies, pauses, and then we have a price discovery to see if we can make another leg, which if it does, in this case, that becomes your support resistance zone. So this is where the buyers and the sellers had a fight. Buyers won. So buyers are in control from that point. When we get back to that point, you see if the buyers want to remain in control. At the moment, they've put some more orders in, but we look like we are selling into it. So if we can get through this accumulation today and out that low, we've got a good chance of retesting that little accumulation behind my head that you can't see. I say little accumulation, it's just that low there, basically. But lots of area of balance in here. This is a good example of failed price discovery. So got balance, which is where the market's happy to conduct business. Price discovery, yeah, happy to trade up here. We go back into balance. Price discovery, failed. Price discovery, back into balance. Try again, succeeded. So that's a failed version. So this whole area here basically is an area of balance where the market's happy to conduct business. So when you get down to here, it's unlikely you will smash through that sort of level. You will always get some kind of bounce, either a reversal or just a bounce, and then flip-flop around it while it's deciding which way it's going to go. But we've got to get through this level first, and then we're running straight into potential results, resistance, previous resistance, turn support, that propulsion gap, basically. There we go. So we're waiting to see what happens with that. Looks like the sellers are in control this morning, though. So, and we're on a break short, which is good. So we'll look at the RSIs. Just catch up on the chat. Finally closed out my yen at 3%. Good job. I was hoping for 5. We're always hoping for more. Unfortunately, we usually get disappointed. Yeah, that's good. Yeah, so the yen's, I mean, this is what position trading is all about. New Zealand dollar CAD 125 ADR. Just coming up into double top. So all these New Zealands, there's a lot of extensions on these Aussies and New Zealands really going for it today. So yeah, I mean, that's what position trading is all about. You sit in drawdown for however long. You just don't know how long it's going to be, but it gets undone very quick. Look at oil. I've been in oil, stuck in oil for where was my first oil? All the way back there, look. So 13th of October, over a month, I've been in oil, in and out, obviously. Bank some profit along the way. But you sit in this while it's going wrong, waiting for it to go right. And then all of a sudden it all undoes. And that is what position trading is all about. You're taking a position in the market, waiting for the market structure to play out. That is the bit that you cannot tell. You never know when market structure is going to reverse because that's not in your control. It's in the bank's control. It will do it. They have to do it because they have to take profit. You just have to wait for them to do it. So it's all about just sitting in drawdown, which is why I'm having a problem with the yens at the moment, because I'm even more, the yens, I'm always unsure about yen. Yen is a very volatile thing. It's the biggest safe haven currency because if you're going to put your money somewhere in times of trouble, you're going to put it somewhere where you know it's not going anywhere. Yeah. For 6 years, they've had negative 0.1 interest rates. You know it's pretty safe. That ain't changing. Yeah. You're not going to earn any money on it, but you're not going to lose. You're guaranteed to lose 0.1%. You know you're going to make a tiny loss. But if you want it safe, it's safer to be somewhere where you're going to make a tiny loss than somewhere that could be affected by volatility when you're unsure. That's why the yen gets the money running into it. But that comes at a cost. So that's just, at the moment, I just don't want to get involved in it, just in case we get a big run into it. The problem at the moment is we've got a lot of flashpoints around the world with conflicts going on, with there's all sorts of things going on economically within countries as well. It's a very boiling pot type world we live in at the moment. And at any point, when you get a sudden rush into safe havens, as we saw with the Swiss franc when it all kicked off in the Middle East, they can last for days and weeks. And the same with the yen. So at the moment, what I'm concerned about is if you look at the interest rates as an oscillator, we've just been doing that for over 18 months. Yeah, we're overbought, if you like. If you look at it as an RSI, interest rates, we're overbought. There's only one way for it to go, which means that the prices go down with it. When all of those prices go down at the same time, the pound, the euro, and the US dollar specifically, that money's got to go somewhere. The only places it's going to go is the Swiss and the yen, potentially into gold as well. So what I'm worried about is being stuck in a squeeze on the yen, which will last for months, potentially, because it's taken 18 months to do that. That will be much more volatile as it comes down, because we'll have rate changes rather than freezes, and they'll be dropped very quickly. But that's what worries me about the yen at the moment. So it's safer just not to include it. You've still got another 20 plus FX pairs to trade without the yen. You don't need it. And you could just maybe trade one or two. Yeah. And US dollar yen is going to be the most volatile. So, but getting out is not a bad thing, AZ. Morning, XRUpdate.news. Currently shorting the yen, US dollar, and odd. Yeah. And the other thing, obviously, if you do want, there's nothing wrong with short-term stop-loss based trading on the yen. We are expecting the yen to have strength, therefore just go down. Yeah. So you can still short it intraday. If you get ADR hits, you get RSI extensions to the upside, take them, but just put like half an ADR stop-loss on it or something and try and, give it a bit of room to wiggle and getting short. But don't put your stops like it reverses there, you get a reversal alert. Don't put your stop there. Put your stop half an ADR away. Yeah, give it time to muck about as it does. but I still just short everything. At the moment, obviously, everything's extended. God, I just looked at the DAX. John Wick is officially in the building. Just wicks, but all upside wicks, meaning that the bulls are trying to get this rally going and the bears are not having any of it. So this looks like it's going to roll over in a minute. Yeah, so there you go. So that's whatever I was talking about. Not with it this morning. Had a day off. As soon as you have a day off, it takes me a day to refigure out what the hell I'm doing. I think the word signal throws people off, thinking it means it's a guarantee of a change in direction. With the reversal indicator, yeah. It's like clouds are a signal for potential rain. Doesn't mean it's going to rain. Good analogy. I like that one. Thanks for subscribing. Just say Rex. Rex. Morning, Potgaiter. Yeah. I've given up. I've literally given up with the people that call it a fake repainting crap indicator. I've just given up, basically. I get negative reviews on MQL5 Marketplace from people who buy the indicator, take 3 trades with it because it gives them 3 signals, and they take all of them, they lose 100%. So it's a 100% losing run. They just put it up and says it repaints. It's crap. Because repainting indicators are awful. But the repainting indicators that are awful are the ones that repaint to try and manipulate the look of the market. Yeah. So there's one out there. I can't remember the name of it. It's a channel indicator. It's renowned for it. Every time price gets out of this channel, I can't remember what the indicator's called. But for ages, it was everyone was going mad about this indicator. What they didn't realize was, as this, it's kind of like 2 moving averages. As this moving average over here moved down, what it did was it dragged the whole moving average down. So that line there, where price pushed out of it and then reversed, and then it pushed down and reversed there, what they'd done is they'd calculated a way of working out that distance so that whenever you looked back historically, price always shifted at that point. But if you took a screenshot of that, then went forward 4 or 5 days into the future, that line would now be down here. This line would now be down here. But because it only updated every candle, you could never see that in real time. And even in the back tester, it had gone off the screen by the time it started repainting those levels. So it was delayed and repainting so much, you didn't actually spot it repainting. And it looked like the best thing since sliced bread. And it also had a little box it put up there, and it used to put how many times the signal worked. And you were limited to the amount that you could see on the screen. So it always had this that looked absolutely amazing. The strike rate was incredible. The profit was incredible. But you trade it in real time? Utter con. And I get why people don't like repainting indicators. And I hate them for that exact reason. But I struggle to explain to people that this is not repainting because it's trying to con you. It's repainting because it's showing you who's in charge of the market now. Who was in charge of the market back here has got absolutely bugger all to do with this price right now. Yeah, I couldn't give a monkey's if this had 50 broken signals on the chart. What's it doing? Just leaving a load of crap on your chart. That has got nothing to do with price here. The structure break we are on now has got nothing to do with that structure break at all. Just irrelevant. But people just don't get that bit. Just, you know, they assume they're trying to, that everybody's being conned, aren't they? That's the thing. Anything indicator that doesn't do what you want it to do, i.e. give you 100% strike rate and make you buy a Lamborghini in 10 minutes, is a con. But I can't fight them because they're just not interested and willing to learn. So I just give up now. I have the same thing I post to every negative review. I just post the same thing now again and say, this is what the last person that said that got as a response. Either spend some time and learn how to trade, or do one, as we say in the UK. Morning, James. Morning, Tammy. Thanks for subscribing, Faradon. Welcome aboard. What's the blue thing in the corner? It looks like a portal to another world. It is a portal to another world. Oh, I can't do it. I've got to go all the way down there, look. That's why I was away on Friday. It's my 50th birthday. Today. Here come all the happy birthdays. It's a balloon. It's not a portal to another world. Actually, what it is, this is my new indicator. Yeah. So what you do is if it's a 5, you go long. If it's an S, you go short. I call it the so-so indicator. It's a balloon, yeah. Watson's envelope. No, it's not Watson's envelope. It's something else. Am I talking about the Bell? I can't even say that. Belk K8 center of gravity? No. I can't remember the name of the indicator, but that's why it's important to watch the bootcamp videos. Exactly, Podgator. But you say to somebody who's just paid $30, $50, whatever for an indicator, they're expecting to buy them a Lamborghini. Sorry, you just need to go and watch 25 hours worth of education to figure out what that thing's telling you. They're not interested. They're interested in getting a Lamborghini in the next 10 minutes and going to stay in the hotel that I stayed in at the weekend with all their money. Yeah, not Watson's envelope, but thanks for the birthday wishes, everybody. I'm a golden boy now. Yeah, I know. The Nifty 50 Club. Really trying to remember the name of it, but I can't. It's a channel. I keep thinking CCI channel, but it's not. It's something. It's called a channel. It's a channel indicator. It'll come to me. It was one of the ones I fell for. I fell for it. Because in the back tester, it looked amazing. Really did. Thanks for the happy birthdays, everybody. All downhill from 50, I know. It is. All downhill from 50. Right, let's quickly cover the RSIs. DAX is really struggling to go short. We just had a big bull candle going. There's a lot of volatility just coming as well. Struggling to go short here. We're stuck. I'll come back to that in a minute. Keep an eye on it. 5 more years and I can retire. I can retire whenever I want, really. This is retirement, really, isn't it? I had an epiphany this morning as well. I've been trading for about a third of my life. I mean, this year it'll be 16 years since I placed my first order in the market, which is pretty much a third of the time I've been alive. So a third of my life I've been looking at these bloody things. Really brings it home when you look at something like this and you go, I've been watching charts for a third of my entire existence. A lot, isn't it? Anyway, Aussie CAD, RSIs. We're extended on the hourly and the 4 hourly. Only just on the hourly, though. We're up there, but we're also up at a previous resistance, potentially. So we've got this level here, which was a double top. We tested it a couple of times in the past. It's kind of reacted and flip-flopped around it. So it's not a great level, but it is the most recent resistance we've got, which was a double top here. So I put that level in there as potentially an area where we're going to start to run out of steam, probably find a few sellers want to step in because that was the next low. And we carried on going from there. We got these two areas coming up as well at 200 and about 300 ADR from where we are at the minute. So lots of room to the upside potentially, but we are at a nice resistance. We're above ADR. We're extended on the hourly. We're extended on the 4 hourly. So there's a lot of confluence on this at this level. So potentially good looking short opportunity on Aussie CAD. Aussie US is also extended. Nice wicks to the upside there, look. Good rejection. Lovely 3-bar reversal gone in there. So as long as that high remains intact, we can break that low. That's a good breaking structure. The downside. I've got 2 shorts on that one at the moment. Target, I'm just going to move to there. That's extended on the 4 hour. Yeah, so we're at these highs now, look. So potentially we are starting a rounded bottom move here. So yeah, we'll see. But yeah, it's going to pull back before it goes long anyway. So Aussie US extended, CAD Swiss, big extension to the downside. So the CAD Swiss, I'm in the hole on at the moment. This is still extended and embedded on the 4 hour, as you can see. I've got an aggressive drawdown control position I put on this one must have been on Thursday. Yeah, there, Thursday. So I entered that on Thursday. We had a big, strong sell-off. That was an ADR hit. Then we rejected. So I got into an aggressive drawdown control position there. Friday, we didn't go anywhere. It started to push up. We got into propulsion. They added shorts. Today, so far, we haven't gone anywhere, but it is starting to come down. I need to put a stop on that as well. Oh, I've got one. There you go. So stops in place at 0.75%, which is within ADR. So going to give it some room to come and double bottom and flip-flop around here. But if it does break that low, I want out of that aggressive. I've got another aggressive that I'm putting on there. My ADR is too far away on this. It's 200. This is really, really struggled. The Swiss franc rallies that we had when the Middle East conflict kicked off, it struggled, the Canadian dollar, because oil's dropped to get any kind of momentum back against it. So with what OPEC have now said, we've got half a chance of an oil rally. If we've got half a chance of an oil rally, we've got half a chance of a CAD rally. However, the US dollar's dropping and seems to be negative, which means that that will drag the CAD down. So the CAD's really stuck between one instrument wanting to rally it and another instrument wanting to dump it. So CAD's kind of got neutral bias at the moment. So we're relying on the Swissy really having a weak run to give it a bit of a pop. Target on the aggressive position is that propulsion gap there, which will be roughly a 50% retracement on that move. Yeah, so if it is going to continue a down leg, I want to try and get out of as much of it as I can there. My hope on this one is just to get out of it, because I've made profit on it already. I've got just over 2% in the bank off of it already. So I've actually made some decent money on it. I think it's just over 2% or maybe just under. So if I can get basically this second aggressive drawdown control position on, which I'm waiting for it basically to break that high, and hopefully we get a structure run back up somewhere into all this. I mean, there's just so much. It's a mess. It's an absolute mess, this chart. There are so many levels it could go to. It's just impossible to predict anything on it. But what I'm hoping is if I can get that position on and hold it, that will bring the average down to here. That gets me out with a nice little profit on the entire position. After that, I'll just jump ship and go, right, that was a mess. So that's extended at the moment on the 4 hour, still just about. It's below that 30 level, but we were extended and embedded. You know, it's stuck. That was my exit. I didn't take it. I took a partial instead of taking the whole thing off from that RSI extension. That was a mistake. Should have got out. But what I was looking for here was the double bottom bounce, pull back long. What I got was a new leg down. So that was just basically a flag break. I was expecting it to be more of a pullback, but we didn't get it. So all, and this is why, you know, fundamentals are so important to pay attention to. You know, when the reason that didn't manage to get any higher there was because oil collapsed, the Middle East conflict kicked off, and everybody bought the Swiss franc. Yeah. So it was all going to happen nicely until all the fundamentals shifted. So nothing you can do about it. The market's driven by fundamentals. When they change and you're in the wrong direction, you've got to deal with it the best you can. Don't like those wicks this morning either. Anyway, that's CAD Swiss. Euro CAD, that one's nicely extended to the upside on the 4 hour. Again, we've been embedded up here above the 60 level all week pretty much, and the week before above the 50 levels. Yeah, so this is just not stopping. Again, Canadian dollar weakening on US, weakening on oil, rallying. So we're just waiting for that move to sort of peter out. I've got 3 shorts on that at the moment. Easy target. So downside target. I'm just going to go with that for the minute. Just to get out, basically. So that would only be a small profit, but we got Euro news this week as well. Oh my God, look at this DAX. So we just put a new low in, but we bought, immediately buying it back up again. So we're running an inside bar at the moment. So we're contracting. We've got 2 minutes left on this candle. So this is an inside bar. So if you want to get into this and you're not in it, you can take an inside bar break short there. If we break that level, we're going to get a little bit of a flush down. So, but at the moment, really not going anywhere. 5, 10, 15, 20, 25, 30, 35, 40 minutes sideways. Stuck in it. Stuck this morning. Euro, US dollar. Lovely wick to the upside on this at the moment. So we know about the US dollar, obviously. The CPI figures, the market really was not impressed. So we'll see what happens with this FOMC meeting tomorrow. If they are bullish tomorrow evening, we might get a reversal and we may come back down and retest this propulsion gap. It depends what they say. But at the moment, as we know, US dollar very, very weak. Even though something is weak, it is going to have pullbacks in it as it rallies. So at the moment, I've got 3 positions on. Problem with this one for me is distance between entries. Absolutely huge, because I got into one and then we sat sideways for basically 5 days and went nowhere. I couldn't get out of it because it wasn't enough profit. It just didn't even go into drawdown. It just sat there for 5 days and went from nothing to a tiny profit, nothing to a tiny profit, and then the CPI figures. So basically my second entry all the way up there, absolutely miles away. I think that's a couple of ADR. 70, yeah, 150. So two and a bit ADR between first entries makes it very difficult to get out. So my average is at 125 ADR with 3 positions on. So that propulsion gap there is all part of this one massive move. So that's really one massive propulsion gap. So target on this one was down in there. I was hoping for a pullback and then push. So now I'll be happy to get out of it there. So just getting out at the minute is the target, not making a load of money on it, because the fundamentals at the moment seem to me like they really do not want the US dollar anymore. So that will all change, obviously. The Fed have come out again, as I covered in the news this morning, and said, actually, you might be wrong. We might have another interest rate rise, tentatively, you know. So, but they may say something more along those lines tomorrow evening, in which case then the market might start to go, actually, yeah, maybe we shouldn't. Best case scenario there, I think, would be if they do start to get a little bit bullish on the US, we'll just return back to this area here and flip-flop around again, as we were for that week there. So I don't think it's going to suddenly power up, but if it isn't going to power up and it isn't going to dramatically weaken, we'll just see it return back to that propulsion gap and sit around. So, but I'm not going to take that chance. That's a double bottom. from Friday. We're going to form a range up here. So accumulation, break, accumulation, could go that way, could go that way. But if we are going to go into a range up here, I'm going to be looking to get out of that range low, just in case, because you could be stuck in that for 2 weeks. Whereas if you're out here, you're out, and then you can do other stuff with your money, can't you? So, yes, euro US dollar nicely extended on the 4 hour. So nice divergence there, bearish, very bearish. The market strength is weak. Making new highs on a weak market is usually a sign of exhaustion. So that's why divergence works. US dollar Swiss, big strong move to the downside on this one. So that's another 4 hour RSI extension. Again, same thing. All these US dollar pairs have got divergence in the opposite direction. So it will or it won't play out. We don't know. But that's just broken out of lows, which isn't great. So 2 positions on that one at the moment. We've pushed down into that little propulsion gap there. I won't be taking another one on this just yet. It's a little bit too tight. But yeah, again, same thing. Huge propulsion gap. That is kind of one big propulsion move that lasted for 2 hours. So again, the target you can see I've got is there on that one. So bottom of that propulsion gap for both positions. Yeah, be looking to get out there just in case. That is literally it, and bang. Same as we saw on the New Zealand dollar, US dollar. Come back, retest the top of the propulsion gap, immediately buy it back up again. So that's US dollar Swiss. And obviously, whatever happens with that, if it continues to drop and we go further down, yeah, then the target will just come down to those highs. Any other propulsion gaps that get formed. So just move the targets down to where you think it's going back to, basically, every time. And US dollar yen, as we've covered, really. So big, strong drop on this. I got out of it on that very first move, just in case it was a profit take leg. But it wasn't. So, yeah, very difficult to tell what's happening with this yen. It seems to be still powering up this morning. So we'll see. But yeah, more strength coming through on this. But volatile at the moment. Everything's volatile. The world's volatile. The economies are volatile. Everything's just volatile, which is great because market moves is what we need to make money. But it doesn't really help us with any directional bias at the moment. We've got interest rates up at peaks. We don't know whether they're going to drop or whether we are having more. Very unknown situation. So DAX is painting Christmas trees at the moment. Just green, red, green, red, green, red. Although I'm using black charts, but green, black, green, black, green, black. Nightmare Christmas. Inside bar on an inside bar forming now. So you've got 30 seconds left. So this is a 2 inside bar setup. Look at that. Definition of indecision. Can we go higher than there? No. Can we go lower than there? No. Well, where can we go then? Nowhere. So break of that. So you've got basically you've got a double bottom and a double top within 10 minutes, which is formed on an inside bar. So whichever way that breaks, there's a good chance that whoever takes control, whoever isn't in the right direction, is going to flip and reverse, and then we'll get a decent break. Hopefully the bears. There you go. So that's a 2 inside bar. I don't even know what you call that. It's a double top, double bottom inside bar formation. It's a new one. But still looks bearish at the minute. Changes every 5 minutes though. US markets just made a new high. NASDAQ, new high of the day. S&P trying hard to go bullish. It's not even a, I mean, it looks like a bullish flag, but really no direction today, is there? Markets are asleep. Let's just see what's going on with oil. Euro yen 125 ADR. So that just confirms that yen movement is continuing. More movement on the yen. Oil pulling over a little bit. Not going anywhere. He can't retire. What are we supposed to do with our mornings? Exactly. Yeah. There's no such thing as retirement anymore. You only retire if you have a job. This isn't a job. This is a lifestyle. All the people that I got the most information out of as mentors, most of them were in their 50s and 60s and had been through this, same as me, basically, been through it, and were making money. And they weren't ever going to give up. You can easily sit there when you're 65, 70 with a laptop looking at this. This isn't going to change. These things are still going up and down completely randomly. They will be in 10, 15 years' time. So why retire when you've got a constant way of making an income that literally doesn't take very long, does it? If I didn't do the live rooms, I would literally be spending an hour and a half, 2 hours a day trading. You can do that when you're retired, can't you? Not the sort of job you need to actually retire from, unless you want to. Time to start thinking about converting your age from Fahrenheit to centigrade. Yep, that would be good. Do you think it's shortened my life with all the stress? I don't know. I'm not dead yet. How can I answer that one? Look at the bags, though. Yeah. I look at some of my my friends, right, who don't sit in front of screens and haven't sat in front of screens for 20 years. And I look at the bags under my eyes and I look at them and I'm like, this is basically what you do all day. Not good on your eyeballs. Especially with these CRT monitors I used to trade on. Cathode ray tubes that were going like that, but we didn't know it. Please give us your weekly bias on the pound US dollar. I don't... What's a weekly bias? How can you form a weekly bias? Neo, you've been coming here long enough to know that if I say long and the news comes out this afternoon from Jeremy Hunt that everything's going wrong, it's going like that. My weekly bias this morning has got nothing to do with what happens when the next time a fundamental hits it. So I don't know. I'm just wondering where if it isn't actually today. This week's autumn statement. Yeah, okay. I'm not. It might not be today. I was under the impression it was today. Maybe it's not. Maybe I should actually be more specific. When? Ah, right. Okay, there we go. Okay, so it's Wednesday. Sorry, no, it's Wednesday. Blimey. Okay, 12:30. So that's not on the calendar either, is it? Oh yeah, autumn forecast. Did I completely whiz past that this morning? Was that always there, or did they add that after I did that search? Obviously, it was there. I missed that completely. I thought it was today for some reason. I got misled by the news or misunderstood the news. So it's Wednesday is the autumn statement. So that's when we're potentially going to get the volatility coming in around about lunchtime from Jeremy Hunt. So from a pound US dollar perspective, what you've got impacting that is tomorrow's monetary policy report hearings, which unlikely that will do anything with the autumn statement coming, and the Canadian dollar. So we have got the CAD, obviously, which will affect the US dollar. But the main thing you're going to find is going to affect the weekly outcome of the pound US dollar is going to be FOMC on tomorrow evening. So pound yen, ADR, still more movement on the yen. So you want to be looking for a double top and potentially an M pattern back down into there. But that is really going to depend on what happens with the market's outlook on the US dollar this week, which we have no clue of, obviously. So you can see we're not going anywhere, are we? Little bit of a push above there. Massive push. Not gone anywhere for a week. Yeah, so if this is the decline of the US dollar starting to get underway, that's what we're going to do. If. Big if, though, isn't it, at the moment? So, as usual, do that. Trade your RSI extensions. In, out, done. Yeah, wait for the market to push hard in one direction and then wait for them to profit take it. Which way it's going to go isn't something you can forecast. It's going to go where it's going to go. The only thing is that you will have to buy your own leaving present. I know. I went out for dinner with some friends on Saturday night, and they were talking about Christmas parties and said, "What do you do for your Christmas party?" I don't know. I'll probably just go down the pub with the dog because she's my only employee. I don't actually have any employees, do I? But yeah, I don't have work colleagues. The only thing about this is why I think this job is so social. On Telegram, Discord, everywhere, because everybody that's doing this is doing this alone. It's not the sort of you haven't got work colleagues when you're a trader. It's a very lonely job. But the plus side is you get to spend an awful lot more time doing what you want to do because you have got no man working. You're not working for the man, therefore the man can't tell you what to do. But you have to find friends everywhere else because you don't have any work colleague friends, do you? Which is sad. DAX is just not moving. Right, so we have got, this is the tightest price action I think I've seen on the DAX for a long time. So we have got a bear candle forming a new low and a new high, a lower low and a lower high, bearish, followed by an inside bar, which was followed by a double top, double bottom, which was followed by an inside bar, which has now been followed by a candle which double bottomed and just about managed to get one tick over the highs. That is the definition of we ain't going anywhere, isn't it? I think I might pull the plug on this morning. In fact, I'm going to do it on that account. So a whopping $2.60 loss over there. The thing that concerns me about this morning is we are totally in 50-50 land on the DAX. Yeah, there is absolutely no bias long or short whatsoever on this. However, when you go and look at something like the NASDAQ, that's flying. You look at the S&P, it's just made new highs. You look at the Dow, it's on a bull run. Yeah. So every other instrument, every other stock market at the moment is rallying. The DAX is unable to break short. That means there aren't enough sellers in the market right now to go anywhere. If the sector purchases are going to pay any effect on this market today on the DAX, it's only going one way, isn't it? If we break that short, we're going to get a flush down to target. That's not a problem, but we're not. So what I'm going to do with it is, I think, just basically put a stop at break even on it and either let the market take me out or we will go and do what we want to do. So, but we're stuck, totally stuck. It's not going anywhere, is it? But is there a pennant forming? Yeah. There is. But there was a pennant forming here. And, you know, it's all, every pattern has a reason it's created, and there is only two of them. So you've got things like pennants, flags, wedges. Also, you know, there's all sorts of things people go and create things. Yeah. So a flag, a bull flag. What is a bull flag? An impulse move with an accumulation. It's just that the accumulation is a little bit more bearish than a range. Yeah. What's a pennant? Yeah. It's just an impulse move followed by indecision. What is a range, a flag, and a pennant? What's the one thing they have in common? They're all breakout strategies. So basically, any kind of accumulation where you go sideways for any period of time, you can try and draw an exact pattern onto it. At the end of the day, 45 minutes now, it's gone sideways. There's no bias. That move has failed. Yeah. Which way is it going to go next? Everyone would now say, who's a pattern trader, it's going to go south because it's a bearish pennant. It's not going to go south because it's a bearish pennant. It's going to go the next way the banks and institutions put the order in for. We don't know which it's going to be yet because we don't know which bank and institution has its finger over the 25 million button, which one's got it over its finger over the 5 million button. Because the 25 million is going to win. Which one is it? Symmetrical triangle patterns. God, the amount of moaning I get. Hang on, you told us that if the last move up when a symmetrical triangle was formed, it would be a bullish symmetrical triangle. It broke to the downside. Yeah, because the market's stuck and it's 50-50 which way it's going to go. Normally, if you've had a bull move, you would expect a continuation of that bull move if there's enough buyers in the market to continue the bull move. No idea. Which is why after many years of studying Elliott wave, chart pattern, candlestick patterns, I studied everything. Nothing has any outcome that is different to 50-50. Right now, this bearish pennant could break in either direction. The reason I like them is because we know something's about to happen. Yeah. So ranges, flags, pennants, and symmetrical triangles, which are pretty much the same thing, are all great because you know something's contracting and it's about to build and pop. How does it help you with direction? It doesn't. It tells you something's coming. So for me, it's a reason to protect that, because if it's that, I don't want to be in it. If it's that, I do want to be in it. I haven't got a clue. It hasn't got a clue. So just walk away. Everybody looks for these patterns because they know something's coming. That's the only thing you know, isn't it? Something's coming. What it's going to be. I mean, this market has no idea what it's doing today. The thing that concerns me is every other market knows exactly what it's doing today. Yeah, they're all very convinced that there's more buyers than sellers in the market. Yeah, so if the sellers basically give up going, oh, screw this, guys, let's go to the pub. That's going like that. That's what's going to move the market. I just need to 15902. Meh, not going anywhere, is it? Right, so that's all I've got for you this morning. US dollar yen 150. Why didn't I not hold it? Never mind. So yeah, big strong move. So we're out the lows, 3-week lows. I mean, next stop on the US dollar yen is basically the intervention low, which is here, which is that double bottom. So you've got plenty of room now, now that we've broken that low. If this obviously pops back up inside there today, then yeah, we're still in a range, aren't we? But if this holds that low we're probably going to find we're short. We want to be shorting. Swiss yen 125. They are buying this yen up big style today. So if you're using the market reversal alerts EA and you are trading the yens, if you're using H4, obviously you're going to have signals on the US dollar yen at the moment, depending which level you're using. But there's a good chance that these may well get extended as well for longs. But those longs are still valid, yeah? If this thing comes down like that, as it did there, it's going to do that at some point. So there is a mean reversion opportunity in all these. These are all ADR reversals today as well. Drop down M5, wait for a reverse alert. Don't blame me if it doesn't hold. It's nothing to do with me, it's the market. If that doesn't hold, it'll make another one. And then it will break again. Then you'll get a W. And then you'll go, oh, wish I'd have taken the second one. Yeah, you should have done. But nobody knows that, do they? So all it's going to do is tell you which way it's going. So yeah, lots of opportunities on the yens, basically. So watch all these. Best thing to do with all the yens is look for areas of confluence. Yeah, I've got a nice area coming up there at 150. That's a much better trade than that because it's got buyers that stepped in at that point. Yeah, so look for confluence, support resistance levels. Still in the DAX. So another this basically this candlestick is still in charge. Look, 5, 10, 15, 20, 25, 30 minutes we've been sitting inside this candle. And we've been sitting inside this candle pretty much since the market opened. Mental. Just not going anywhere, is it? You look at it on a 15-minute chart. Yeah. That's your symmetrical triangle. So break of that low or that low. That is, there's three, when you take a symmetrical triangle break, there's three entries: aggressive, mediocre, conservative. Yeah. Obviously, the more aggressive you get, the less likely it is to work. But that one's my favorite. So take a break of that. So you basically formed an inside bar. There you go. Stop. Going to stop out on that short. So all the other markets are going long. Not worth being in it. Break even. Just close those off. Yeah, I'm not going to trade this today. If you're going to do anything today, I mean, right now, obviously that candle has just triggered potentially an upside break, and all US indices are going through the roof. So, but you know, this thing could just do that. Yeah, you're going to find it very difficult to make money out of it today. So, best come back for the US this afternoon and see if we can make some money out of the US. Right. I'll leave it there today. Oil seems to be doing okay still. So it's starting to rally back up a little bit. Nothing banked on Friday because I wasn't around. I can bank loads of oil today, but I'm waiting and hoping that the market has woken up on Friday. And we are actually going to start this rally now. So I'm going to take off one of that. I'm going to take off that big position there. If we push up today. In fact, does that even make a logical target now? Tricky. It's tricky to know what to do with oil now. It really is. This reversal here is that high. So there is a little bit of confluence with price action hitting that area multiple times. And then we broke and tested it. So that's well within ADR. This propulsion gap here is kind of, I think, invalid now because we basically have reversed that entire move. So I'm going to go for a little bit more room on it. If we can break that high today, I think we've got a chance of getting a break on. So I'm not going to get super aggressive. That would be where I would expect it to go to. But I've had this for too long. I'm not willing to take that risk. So I'm going to try and get out of it on a rally up into that area there. So I should be able to bank a decent amount today off the back of oil, which will basically pay for that, which was a loss on oil. So all I'm doing is I'm just recovering my loss, not making any money on it. But we'll see. So we'll come back to oil this afternoon and find out. But I'll be back tomorrow morning, same time. There's nothing else to cover this morning. Everything else, I'm just kind of waiting on movement for. CAD Swiss, I'm watching. I've got an aggressive on that, obviously. At the moment, that's not looking like it's doing particularly well. So hopefully we get a break on oil. That helps the Canadian dollar a little bit. But at the minute, we are getting run over because the US is getting run over. So we'll see where we go. But I'll be back this afternoon and we'll have a look at it in more detail. Thoughts on EJ and GJ? Well, they're extended on RSI at the moment and ADR, or ADR anyway. So longs, intraday, you want to be looking for reversal longs. Wow, that's really sold off. Look, nearly 175 ADR. You're not going to get a reversal alert on that this morning because it's too aggressive. So you're going to need to use price action. So wait for inside bar breaks, bullish engulfing, any kind of hammer on that one. GJ, pretty much the same thing. Slightly tighter reversal on that one, but that's been selling off now for 30 minutes straight. Not one bull candle in place. And again, we're just approaching 125 ADR on that, but look for confluence. Try and find levels. Yeah. As I said, that low 150 ADR is a much better place to take pound yen, euro yen, and just beyond one. I mean, it could be anywhere in there really, but you are double bottoming at the moment, euro yen. Actually, yeah, euro yen, you're double bottoming on Friday's low, look, right now. Yeah, Friday's low. So push up into there. Right, I'll leave it there. I'll be back this afternoon, 2:20 for the New York session as usual. We'll trade the US indices. Not getting anything out of the DAX this morning, so we'll see if we have any more luck with the US, but the DAX isn't moving, so there's no point in trying to get involved in that today. Yeah, we'll see how everything else has gone. I'll update if anything changes or if I've decided to get out of oil. If we break the highs on oil, I might put a trailing stop on it. And I might just move that TP up and put a trading stop on it because we did get a very nice rally in New York on Friday. We might get it again. So I'm going to wait and see what happens with it, but all going well. New highs on the US indices. This is really rallying today. Look. So, yeah, don't short the DAX at the moment, I don't think. Everything's going mental. Right. I'll be back this afternoon and tomorrow morning. If you're not here this afternoon, have a good day. And yeah, we'll see you next session.